Hello everyone, how's it going? In this video, we will talk about Tesla trading under the ticker symbol TSLA. In recent market activities, Tesla shares have undergone a significant 8% decrease over the past 5 days, marking about 14% decrease in the past month and 27% decrease over the past 6 months. Now, despite this decline, the medium-term trend indicates a more lateral movement than anything else, with prior support levels around the $200 region being tested twice. The intricacies of Tesla's exposures across various markets and the evolving landscape of the EV sector could be influencing its recent downtrend. The concept of an EV winter gaining traction in discussions may be exerting an impact on Tesla's market shares and also performance. It is crucial to move beyond the surface level headlines and to delve into the broader market dynamics that might be shaping Tesla's trajectory. Another significant factor that requires attention is something called reputation risk. Elon Musk, Tesla's enigmatic CEO, is known for ventures that extend far beyond the realm of EVs. News headlines and Elon's involvement into other business pursuits have the potentials to potentially sway Tesla's brand image. For long-term investors, this factor introduces a significant element of consideration. Because he is characterized by his unconventional approach and involvement into different events and ventures like SpaceX, Neuralink, and also X, or formerly known as Twitter. His influence on Tesla's brand image and comprehending the potential impact on the long-term investment may emerge as a vital aspect for the shareholders to definitely consider. For those considering Tesla as an investment, it is paramount to evaluate the genuine motivations behind acquiring Tesla stock. If the objective is to capitalize on short-term volatilities, it's worth noting that the market might be entering consolidating phases, presenting fewer opportunities and also narrower margins. But for those with a longer-term investment horizon in Tesla shares, heightened awareness of the continued relevance and trajectory of the EV sector may become crucial over time. Consider, for instance, the current headlines surrounding the potential increase in Tesla equity by Elon Musk himself, the exchange of AI or robotic operations being potentially outside of its conventional parameters. Such incidents are poised to have a pretty major impact on Tesla as a company, especially if the market perceives like the whole thing as a shift in the prevailing winds. Now, investors navigate Tesla's landscape with with a very crucial notion of understanding the nuanced perspective that transcends the immediate market fluctuations. Tesla's unique position in the EV market, coupled with the multifaceted influence of Elon Musk, does require a thorough understanding of the dynamics at play. Whether one seeks to capitalize on short-term opportunities or embark on a long-term investment journey with Tesla, a comprehensive evaluation of the market conditions and Tesla's role within it may become very important. Now, before the video continues, if you would like to see more stock analysis videos like this one, please remember to like, comment, and to subscribe to my channel. So, over the years, Tesla has emerged as a compelling choice for retail investors seeking substantial profits in the dynamic world of stock investments. Several factors have contributed positively to the allure of Tesla as a suitable stock for those eyeing significant returns. Over the years, Tesla has positioned itself at the forefront of what we now know as the EV revolution. As the automotive industry has undergone a profound shift towards sustainability and later profitability, Tesla's innovative approach to electric vehicle has allowed it to take a leading position. The company's EVs have won widespread acclaim for their performance, range, and technology. With a global emphasis on reducing carbon footprints, Tesla stands on benefiting from the increasing demand for clean and energy-efficient transportation solutions. Now, as we mentioned previously, another aspect to consider is its CEO, Elon Musk. Elon Musk is widely regarded as one of the most visionary and dynamic leaders in today's business world. He has very ambitious goals, like achieving mass market adoption of EVs and disrupting traditional transportation models. It has captivated investors, and his decisions and also like leadership over time have contributed to Tesla's ability to secure a strong market position, fostering like very powerful confidence amongst retail investors looking for a market with a visionary leader at the helm. The expansion of Tesla beyond the electric vehicles is another factor that makes it an intriguing investment option. The company has diversified its offerings to include energy products like solar panels and energy storage solutions and so on. The growing global interest in renewable energy sources positions Tesla to tap into a broader market and revenue streams far beyond the automotive sector. This diversification not only enhances Tesla's resilience, but also provides investors with exposure to multiple high potential industries. The development of self driving technology, advancements in battery technology, and also ongoing improvements to vehicle software contribute to Tesla's reputation as a leader in the automotive innovation. For retail investors who are seeking large profits, being associated with a company at the forefront of a burgeoning sector can be a strategic investment choice. Financial performance is another critical aspect that makes Tesla an attractive option for retails. The stock has experienced volatility for sure, and reflecting the inherent risk of investing in growth-oriented companies, Tesla stock shown remarkable appreciation over the years. The company's ability to deliver strong revenue growth, particularly in the context of the global push towards sustainable practices, underscores its potential for substantial returns. The expanding global market for electric vehicles further supports the case for Tesla as a very lucrative investment. Governments worldwide are increasingly incentivized for EV adoption through subsidies and regulations. Tesla's early and dominant presence in this market positions it to capitalize on those trends, potentially leading to increased market share and profitability. We should always consider and appreciate the brand strength and customer loyalty that Tesla cultivates. The brand is very synonymous with innovation, technology, and commitment to a better tomorrow. So, as consumers have become more environmentally conscious and technologically savvy, Tesla's brand appeal is likely to translate into continued strong demand for its product. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Now, in my assessment of Tesla, I anticipate that the stock will remain relevant as long as the EV sector continues to do so and hold promise for investors. Tesla has proven to be a lucrative investment in recent years, but the potential for substantial growth in the market capitalization may be somewhat constrained. I would suggest exercising patience and observing potential price corrections in the coming month and years before considering substantial capital commitments. I would recommend committing between 5 to 8% of your portfolio in Tesla and to split the allocation in about batches of like 10 to 20% at a time over the next 3 to 6 months.